Stop. Before scrolling, listen up. The stock market created more millionaires last year than real estate or crypto. Many began with just knowledge. This video shares that knowledge. By the end, you'll understand the stock market better. This is the voice of wealth, starting from zero. If you're new, this channel helps you understand money. Hit subscribe. Let's dive in. What is the stock market? The stock market is for buying and selling company shares. Companies sell stocks to raise cash. Buying a stock makes you a part owner. If the company thrives, so does your share value. If it struggles, the opposite happens. This occurs in markets like the New York Stock Exchange. Simple. Clean. Why should you invest? Why invest instead of saving? Here's the issue: inflation. Living costs rise, making savings lose value. With 10% inflation and 4% savings, you lose 6%. The stock market helps defend against this. Historically, the S&P 500 offers about 10% annual returns, helping your money grow. Investing $200 monthly can yield over $450,000 in 30 years. Start early. Wealthy people invest, knowing idle money loses value. Key terms you must know. Let's clarify key terms. Stock, share, ownership in a company. Dividend, money paid by companies for holding stock. Portfolio, your collection of investments. Bull market, rising market, optimism everywhere. Bear market, opposite, selling opportunity. Index, a group of stocks. ETF, one purchase of multiple companies. Broker, platform for stock transactions. Write these down. How the stock market works. How does buying stock work? Step 1. Open a brokerage account. In Nigeria, use Bamboo or Trove for US stocks. Step 2. Fund your account. Step 3. Select a stock or ETF, like Tesla. Step 4. Place an order. Step 5. Execution. You own the share within seconds. This process takes under a minute. Prices fluctuate based on supply and demand. How to pick your first stock. What should you buy? Avoid individual stocks at first, even pros struggle to beat the market. Start with index funds or ETFs, like an S&P 500 ETF. When ready, consider, first, buy what you know. Second, check earnings for profitability. Third, think long-term. Fourth, invest only what you can afford to lose, aiming for 3-5 years. Beginner mistakes to avoid. Learn from common mistakes. 1. Panic selling misses recovery profits. 2. Timing the market leads to failure. Consistency matters. 3. Don't invest all in one stock. Diversify. 4. Don't trust social media hype. Research yourself. 5. Understand fees to maximize returns. How to get started today. Here's your action plan. Step 1. Choose your brokerage. For US access, use Bamboo or Trove. For the Nigerian exchange, consider Stanbic IBTC or ARM Securities. Step 2. Create your account. It takes about 15 minutes. Step 3. Start small. Begin with as little as $10. Step 4. Purchase your first ETF. Let it grow. Step 5. Commit to learning. More knowledge leads to better choices. You don't need to be wealthy to invest, but you must invest to build wealth. Recap: the stock market lets you own parts of companies. It grows money faster than savings. Know key terms, understand trades, start with ETFs, avoid mistakes, and take action now. It's not complicated, it's just new. If this helped, subscribe for next week's video on stock charts. Comment below, Are you investing now? Share this video, you might change someone's future. I'm